Okay, traders, in this module we're going to be talking about the 3-day setups in a bit more detail, just to clarify some things in terms of understanding the mindset behind why I've skewed these setups into my playbook. I don't want to be dealing with guessing a direction or anything like that. I'm looking for reproducible, specific setups where I know I have edge. And that edge is a high probability outcome based on what's happened over and over again. And these 3-day setups, which we'll go a bit more in detail into, obviously the majority of the trade setups all originate in this 3-day setup, all of them. So first green day, first red day, parabolic trend trades, parabolic short squeezes, session scalps, low-hanging fruit, first bounce, they all originate out of these 3-day setups. So I follow a basket of instruments that I know these show up over and over again. Now I could look at other instruments and include them in my basket, but there's enough really good trades, which again is why I will keep repeating this phrase throughout this course, is that I only really want to trade the highest probability trade setups. And then the other trades that I do take that are session scalps and whatnot are still heavily skewed, but they may not carry as much size on those trades. They may just be a bread and butter opportunity that is a high probability trade setup that repeats over and over and over again. I want the odds skewed heavily in my favor. And day 3 typically is when I'm looking for these vertical moves. Sometimes we can have a 3-session setup just on a given day, and we'll go a bit more in depth. That typically will be on a day 2. And those can be with trend on day 3. They could be a parabolic blow-off trend trade after a first green day, or it could be a reversal after a first red day. It could be a reversal after 3-day breakouts, or it could be a 3-day setup where we have a first red day on day 2 and a high day short trade on day 3. Those types of scenarios. But these trades are reproducible and repeat over and over and over again on every market. So one of the points I want to emphasize is don't just try to trade one instrument when we have perhaps, as I do, US Swiss, US Canadian, US yen. For the most part, follow a very similar template, but there will always be one textbook perfect opportunity on one of those pairs. They will tend to move similar, and one of them may be cleaner than the other in terms of its setup, but I group them as one. The euro and the pound are similar. One may be more perfect than the other one. Gold, oil, and the indexes. I don't try to trade all the indexes. I look for 1 or 2 that have the setup lining up as it should for a best trade setup, and then I'll pick one or the other. Sometimes I get, maybe get the other one moves better than the one that I get, but they'll typically tend to still give a good trade, and very specific about identifying the instrument and the setup that you're going to trade. So typically on the 3-day cycle, day 1 will typically start as a weekly low of week or high of week that breaks out of a daily high or a low and fails. So it breaks out, could be on a Thursday or Friday. It may break out and pull back inside of the previous day's level, the high-low level, and close back inside. So it breaks out and closes as a false break. Sometimes we'll see that breakout, and the next day will reverse back inside of that breakout level. So one of the things I'm going to emphasize is to understand where a market has broken out of a daily high or low or a weekly high or low and failed on the day into the close, or fails the next day back inside, because sometimes they'll mask that as a failure in the next day, and traders will still perceive it as a trend even though that breakout has failed, and now we may be targeting a reversal to the other side of that range. The exception to this rule is if we have a reset. So one of the things we'll go over is the reset. The reset is typically a 3-day cycle. We're looking for a day 3 setup or a trade setup that doesn't eventuate because the market continues to stay trending or in a breakout mode. So we have markets that are it breaks out of a previous day's high or low, and it closes and stays outside, and then the next day, instead of reversing, breaks back inside and then closes again on the outside of a previous day's high or low. So instead of reversing now, we can get a reset day, which will often have a false break reversal in that reset itself on that day of a daily high or low on that day. And then we start the count again. We can get a new 3-day cycle that starts on that day 3, and it becomes our new day 1. And we'll show some specific examples of that. The thing to understand is that most breakouts fail. When we have a failed breakout, we can look for a day 3 trade setup. We may get a failed breakout on day 2, and that can result in a first green day, a first red day. We can have an inside bar that the next day then becomes a failed breakout. It could be a 3rd day breakout on the following day of an inside bar that again gives us a high of week or low of week opportunity. High of day, low of week, high of day, that sort of situation on a day 3. 3-day cycle, we've talked before about this. We can start the week on a Monday, but we could have a day 1 that's a Friday, the peak formation low of the week that fails, it breaks out, it fails. And then day 2, which is our Monday, could end up being an inside bar. It could be a first green day. It could be a first red day. We could get a continuation day. It can break out and pull back and continue to trade in the direction of that original reversal. And so if we get a first green day or a first red day, we can potentially have a trade setup on day 3, a first green day, first red day trade setup. Or on day 3, we can get day 3 breakouts that give us a trade setup. So we can get a 3rd day of breakout traders entering into the market, which can give us a high of day, high of week, short opportunity in London or Asia sometimes, or the US. Typically a larger move will come after 3 sessions. Or we can get a false break reversal. So again, day 3, we can get a false break reversal that can eventuate into either a reset, or it can be, as I said, a continuation of the current trend. If it's an inside day, we can possibly have a trend continuation. So sometimes major red news can affect this cycle. Obviously the Fed, possibly a payrolls week. If it's an individual currency, perhaps an interest rate announcement or release that week may affect that instrument's pattern. But again, I talk about not trading those instruments in those sessions. Now, there are some exceptions. We will talk about the first bounce trade, but typically the first bounce trade will coincide with a day 3 trade setup. So a reset will continue into the new 3-day cycle, and so we could have a Monday, Tuesday, Wednesday, for example, that doesn't eventuate into a day 3 trade, but we could have a Wednesday, Thursday, Friday that eventuates into a large move on the Friday. So that reset happens on the Wednesday. We get another day 1, day 2, day 3 could be a large move, or day 3 on the Friday could set up a large move on the Monday. And we'll see that sometimes on oil or some of the instruments with a parabolic short squeeze or a high of the month reversal trade on the false break at the beginning of the new week that takes out the high of the week and the high of the month for a false break reversal and a large move down at the beginning of the week. So again, day 2, we can get some trade setup triggers. First green day, first red day. The inside day is a trigger itself to alert us to a possible reversal on a false break at the high or low of the week. Or we could have, again, if there's major red news on the calendar, that could be a possible trap on the inside, a break in structure for a continuation move for a trend day. But the parabolic trend day and the parabolic short squeeze will often come out of a day 2 setup or into a day 2 setup. They can be extremely lucrative opportunities and trade setups, and we're going to be going over those. Right now in this module, I'm just painting the bigger picture of understanding that most of the high probability best trade setups will come in a 3-day rotation. That does not mean Monday, Tuesday, Wednesday. It could be a Thursday, Friday, Monday on a pair. And then we could have a Friday, Monday, Tuesday on a different instrument. We could have a Monday, Tuesday, Wednesday on a completely different instrument. So there are great opportunities every single day when you understand the 3-day cycle and you can identify the setup and the template in an instrument, and also recognizing, and we'll just type this in here, we want to know two things. Is the instrument setting up or in play? And if it's not in play, I don't want to trade it. Don't try to trade something where there is no edge. So these setups are about edge. The 3-day setups are about edge. And as I said earlier, these 3-day setups are where all the other larger best trade setups come from. First green day, first red day, parabolic trend trades, parabolic short squeezes, the low-hanging fruit, which is the trend continuation, so we can get a high of day, high of week short trade in London, but we might get the low-hanging fruit continuation trade in the US session. We can get second day trades. We can get the first bounce trades. Again, those will come. First bounce typically will come in a day 3 trade setup, but it coincides on the calendar where there's major red news. The first bounce allows us to enter that trade. Second day trade will be a major follow through after a big news, typically the Fed. We can see a second day trade on a breakdown from a 3-day setup out of a large, maybe week 2, week 3 trap volume up higher, down low, and we'll see that that second day continue in Asia for a blow off move. They can be tremendously lucrative opportunities. But I'm hammering home the understanding that I'm not going to the screen trying to catch movement to scalp pips. I'm looking where the edge is in my favor that is scalable. And I guess I missed the A there. Scalable and sizable, because those will rinse and repeat. And again, if I want to manage my risk, I want to trade setups where the odds are so heavily skewed that I can participate in those trade setups with minimal downside and a huge upside to that trade. We'll look at some specific examples, again, just to get deeper now into those 3-day setups and look at the cycles, and then also understanding when there's just if there's a lot of news on the calendar, if that larger chart is just not setting up ideally, then we look at something else or we wait, because there will inevitably be, when the market consolidates and stays range bound over 2 or 3 days, there will be a big move out of that consolidation.